Hello all. We'll discuss the 10 best relatively inexpensive assets that will make you rich today. Have you ever wondered what sets the wealthy apart from everyone else? It isn't a secret code, a book of magic, or DNA passed down through the generations. Instead, it takes forethought, strategy, and determination to push oneself outside one's comfort zone. Regarding your budget and the viability of your proposal, you must be impartial. In this video, we'll talk about 10 accessible assets that can help you get wealthy more quickly. More than just earning and saving money with each paycheck is required to build wealth. Investing in assets that generate income for you is another way to grow your wealth. In this way, your money grows passively without you actively working for it. Every minute you earn passive income is pure money, because time is a priceless resource. We'll go over 10 accessible assets in this video that you can invest in to increase your wealth. 1. Many cheap stocks are floating around. Long term, that would be great. However, you may count on stocks to deliver significant returns if you're confident in your ability to spot market trends. If you have a plan, you won't react hastily in the face of happiness or apprehension. Some investors combine the two, and your system can incorporate additional elements like exposure to foreign securities. It helps you decide how substantial you want your investments to be. Investing in actively managed funds can outsource some of your investment duties. Due to their excellent portfolio diversification, index funds that follow a benchmark index like the S&P 500 are regarded as low-risk investments. These funds can be used to purchase equities, exchange-traded funds, or ETFs. It is also wise since high-quality, long-term investments frequently outperform the market. It would help if you kept funding your investment account regardless of the market trends. Your potential for wealth increases with the size of your capital investment. Use market data to inform your investing decisions and reduce some uncertainty in trading stocks. 2. Bonds issued by enterprises and governments. In essence, bonds are revolving loans between an investor and a borrower that require periodic payments to be made. They become more secure over time since they are more stable than stocks and shares. Bonds are a type of financing that businesses use to raise money. Bond investments can be profitable in two different ways. First, you can keep the $1,000 difference if you buy bonds for $20,000 and sell them for $30,000 when their market value increases. Most bonds are traded over the counter, which necessitates the use of a broker as opposed to being swapped in public. Bond prices fluctuate less than stock prices do. Municipal bonds are also issued by a state, local, and other local governments to fund public works and services. Still, since the bond market is less transparent than the stock market, it may be more challenging to determine whether your price for a particular bond is fair. 3. Commodities. Commodities are unprocessed materials used in various industries to produce goods and offer specialized services. Several commodities are available for traders to buy, some of which are more cost-effective than others. For example, a vast range of goods and services are manufactured using oil, a commodity. Base metals like copper and zinc are inexpensive investments in a market that may be quite volatile. Therefore, prior knowledge of the hazards is crucial. Prices rise as supply becomes limited or demand increases. When supply rises or demand falls, they fall. Businesses that manufacture at a high cost are the riskiest ones. They run the danger of going bankrupt if prices drop. Numerous methods can be used to invest in commodities. The leverage effect suggests that trading commodities have the potential to make or break you financially. ETFs are a practical way to invest in a single or a collection of items. When selling them, you are more likely to receive the highest price for your assets because they immediately expose you to commodities and market-based pricing. Due to the minimal correlation of commodities, you are not overly exposed to any one firm. They can be used to diversify a portfolio, which lowers risk and evens out returns. Remember that price rises are frequently cyclical. So there might be better choices than commodities, investments you can buy and hold. 4. Deposit receipts. These are monetary investments that banks and other financial institutions frequently make available. These depend on investors lending cash to a bank, which pays interest on the borrowed money. Depending on your bank, this asset may eventually prove to be a cheap way to produce passive income. It could take some time to acquire money using certificates of deposit CDs in an environment where interest rates are low and inflation is high. Savings account interest rates are lower than those of CDs, which are also FDIC insured. Your assets can be organized into a ladder structure with CDs, and you can stop worrying about them. Purchase CDs from a bank branch in person or online, then arrange them in a ladder pattern. You can combine each CD into a longer-lasting CD as it becomes older, while keeping easy access. Small inflationary losses are the worst-case situation with CDs, but you will still have more money in nominal terms. 5. Properties for rent in homes. One well-known way to make passive income reliable and constant is to rent out real estate. Consider using services like Airbnb and other rental applications to rent out a house that is being sold at a reasonable price and in excellent condition. A 30% down payment is frequently requested of borrowers for rental properties. The skills required to be a landlord range widely, from comprehending tenant law to fixing a leaky faucet. Maintaining a cash reserve is advised by experts in the event of an unforeseen loss. The down payment requirement for investment houses is typically higher than for owner-occupied homes. Whether you have unpaid medical bills, school loans, or children who will soon be attending college, the most intelligent investment you can make now might not be buying a rental property. Instead, consider a location with reasonable property taxes and amenities. Also, loans have a higher rate of return than cash, even though money might produce a positive cash flow every month. A mortgage for a rental property is very similar to one for a primary residence. Borrowers must meet tighter debt-to-income ratios and credit score restrictions requirements for financing a rental property. Mortgage financing is not permitted to be discriminatory. People should strive for 15%. Annual maintenance costs, such as pest control, landscaping, and annual upkeep for repairs, should be approximated at 1% of the property's value. Look for a home priced below market value and needing only minor repairs, or speak with your insurance agent to be sure you have the right coverage. Due to their affordability, condos may be desirable for those looking to own rental property. Rental property owners can either manage their properties themselves or hire a property manager. It's a challenging decision. Profits are reduced because managers frequently take between 8% and 12% of the rent received. Hiring a professional property manager may be well worth the cost. Investing in real estate can earn more passive income than working a full-time job. In addition, tax deductions are available for interest paid on loans for rental property. You should consider creating a real estate partnership if you need more resources or expertise. Most borrowers are expected to put between 20% and 30% down on a rental property. Property for rent. Mortgages have a higher default rate than mortgages for primary residences because financially troubled borrowers give priority to those residences. Although they are frequently less expensive than comparable single-family homes, condominiums are more challenging to purchase. Either way, our goal is to assist people like you in making billions. So if that describes you, be sure to subscribe. 6. Real estate investment trusts, or REITs. Consider real estate investment trusts if the real estate market is too risky. Investors combine their funds to buy and sell more rental properties, increasing your profit from the real estate market while taking on fewer financial risks. REITs are becoming more well-known. The most dependable REITs have a record of paying significant and increasing dividends. However, growth potential comes with hazards, which vary depending on the type of risk. REITs may grow faster than non-REITT companies because they are not subject to corporation taxes. REITs that are publicly traded frequently offer greater transparency and the most liquid shares. These REIT shares may be purchased through a broker participating in public, private, or non-trading offers. The SEC observes that these real estate investment trusts frequently don't give investors an estimation of their value until 2 years after the offer expires. To provide quick diversity at a reasonable cost, you can invest in real estate investment trust mutual funds and exchange-traded funds. Even though REITs are tax-exempt, investors must pay taxes on any dividends received unless the tips are held in a tax-advantaged account. Non-trad rate investments may need a minimum of $30,000 and will only be available to authorized investors. 7. Individual savings accounts. Savings accounts are among the safest investments, even though they may appear like an odd choice. They fluctuate in value and appreciate more slowly than the other goods on this list. They might be helpful if you want to set up an emergency fund or save for something else. 8. Collect. Given that it depends on the item, this investment carries a high risk, but it could pay off handsomely in the long run. Collector cards, coins, and even trip stamps fall under this category. Even wines and alcoholic beverages might be financially successful if supplied to the right clientele. 9. Fundraising. This approach to investing in startups and small businesses has recently gained popularity. Many new startups are looking for investors on crowdfunding websites. You could be looking at a new stream with some research. 10. Items produced by hand. The most important thing to invest in, perhaps the last, is oneself. You can launch your own online business by starting your podcast, website, or ebook. Though they require some of your time and work, creating digital goods is an excellent method to make money rapidly. The video has come to a close. Please see my upcoming video. Enjoy your day, and thanks for watching. All the best.